Hello and welcome to Fundu Money. Here we will be discussing about capital gains tax application on listing gains made from your IPO investments, which is initial public offering investments. What is the capital gains tax treatment that happens when you make gains on IPO listing? So you've invested into an IPO, you get your shares, and on listing you're making a gain. Now, what is the tax treatment for these gains? So that's what we'll be discussing. We'll also be discussing the investment implication, because these tax laws should be guiding you in your investment strategy or investment approach. What does it mean for your investment? So we'll be discussing that aspect as well. We'll be discussing the details in just a little while. Welcome back. Welcome to Fundu Money. We are discussing capital gains tax on listing gains. We are talking about initial public offerings, IPOs, and if you invest into an IPO, you are allotted the shares and you sell it and make a gain. That's what a lot of people get motivated as far as IPO is concerned. Now, what is the tax treatment? Because once you're informed about tax treatment, that should also logically influence your investment behavior in an investment strategy. So when we talk about initial public offering, that's the first time the shares are being made available to the public. Remember, there's an upper limit for individual investor, which is 2 lakh rupees, and so that's something that you need to keep in mind in terms of IPOs. Now, let's get started. If you're this tax treatment gets into the picture only when you sell the shares, right? So even if you made a notional gains, you haven't sold it, you're not liable to pay any tax, because once the sale happens, that's when you're liable to pay tax. Now, if you're making a listing gain, that means it's a short-term capital gain. And the gain you're making has happened within a period of 1 year. So the familiar rules or regulations apply, which is the gains you pay 15% short-term capital gains tax, and the rest of the money is yours. Of course, if you hold on for a year, then it becomes long-term capital gains, and you pay long-term capital gains tax on the portion which is more than 1 lakh rupees. So till 1 lakh rupees in a financial year or an assessment year, whichever way you want to say, that till then you're not that's all tax free, you're not liable to pay tax. But above that amount, you pay 10% the long-term capital gains tax. So this is how it works out. Now the point is that if you're going to wait for a year, then the whole question is, why did you invest in an IPO, or why should anybody invest in an IPO? You can buy it in the secondary market. Now, one of the motivations for buying an IPO is, of course, listing gains. Now, if you're making listing gains, so that's where the equation you have. You've got an upper limit for investment, and you also have in terms of tax, you have to pay 15%. So this means that you have to be very sure, or you feel good that you'll be allotted shares, and after paying the tax, that amount that is at your disposal, you should be comfortable. If you really want to do a great job, then number 2 is you're very interested in IPO investing. You should have a good strike rate, that every time you're getting shares allotted and you're making listing gains. Remember, a lot of the companies don't make listing gains, and typically when the markets are buoyant, that's when you're making these gains. A lot of times they don't make listing gains, they're actually the stock prices actually from the listing price, it actually goes down. So you need to be very confident. You need to have an appetite for this kind of development. in any case, if you're trying to do that, you're obviously not an investor, because an investor is trying to participate in the long-term growth of a company, whereas if you're trying to make a listing gain, you're more like a trader who's trying to make money on the price differential, right? So you have to figure out what kind of financial behavior you will be subscribing to, whether it is that of an investor or it is that of a trader. Because in case if it's like a trader where you're trying to make a gain and that too in the short term, then there could be unfavorable outcomes as well. Now the other motivation, which is a more interesting motivation for an IPO as far as people like us are concerned, is if it's a very interesting new concept. Suppose the business of the company which is going for the IPO is very interesting and you would want to have that as part of your stocks portfolio, then it starts getting to be very exciting in the long term. In any case, even if you are not making money either in the IPO or overall, you're investing in various places, and the net outcome is such, whether because of the IPOs, a bet not taking off or otherwise, then just in case you make a capital loss overall, then there is a tax treatment. You get reasonably favorable tax treatment where you can carry forward the losses for 8 consecutive financial years. So we won't get into that. Links are given in the description section. There's also links are there as far as IPO investing is concerned, the do's and don'ts, which we have been giving you the links, and you can check them out, and hopefully you will find this useful. So we hope you found this whole discussion useful. If you've liked it, hit the like button, share it with others, and subscribe to our channel and get connected with us on all leading social media networks. Till the next time, take very good care of yourself, and goodbye.